In this video, we review recently established bullish trends that remain intact. We'll start with Demark charts and then move on to traditional charts for stocks, commodities, and bonds. If you'd like to watch this video in full screen mode, you can click in the lower right-hand corner of your video player. Currently, the technical windsock is still favoring bullish outcomes, primarily based on central bank intervention. We could easily move back towards a debt and deflation scenario, so we have to remain open-minded and flexible. To improve the clarity of the charts and the resolution on your screen, use this button in the lower right-hand corner of your video player. It's Friday, July 13th after the close. We're looking at a daily Demark chart for the S&P 500. Demark charts and indicators are proprietary tools from Market Studies LLC. A few points here. We had a 913 exhaustion count here at the peak in late March. One of the counts gave us a 913 exhaustion on the downside. Here that seems to have worked well. The takeaways for us here, these yellow lines are somewhat of a bull-bear demarcation lines from a momentum standpoint. It's a good sign this week that once again, like here, we held it. It tells us that the odds of moving towards this target up here at 1440 are a little bit greater from a momentum perspective than moving towards this downside target at 1269. The risk-reward ratio in this market, based on these propulsion targets, is favorable for the S&P 500. We do have other Demark counts that would require the market to come down and make a new low to pick off these 13s, so we have to keep an open mind. But as of the close on Friday, this chart continues to lean bullish. Now we're looking at a weekly chart for the S&P 500. Similar situation here. The market held at these yellow lines, which says this upside target of 1427 is still realistic. The downside target of 1296 really isn't the favorite outcome as long as we stay above these lines here. Good sign was that we came down and stopped at this propulsion target here, and that was in early June when we started buying. You can see we also got the 9 up, which is a buy setup here, which tends to be good when you get that near support levels. So all things being equal, the weekly and daily charts look pretty good as of the close on Friday. Downside still possible, but not the favored outcome. This is a weekly Demark chart of EFA, foreign stocks. Similar situation, we had propulsion support here. We got the 9 up. This was support that was broken in a bearish manner, but you can see as of the close on Friday, we're back above this support level. All things being equal, that's a good thing. From a risk-reward perspective, the downside target here is much, much closer than the upside target here at 6184. With a close on Friday at 49.35, this still represents a good value in that we're roughly 30% off of this high here. So you're getting an opportunity potentially to buy low and hopefully sell high at some point in the future. Let's quickly update the Demark charts for TLT, the long-term Treasury ETF. This is a monthly chart that we're looking at now. We've got an active 913. You know that because of this risk level up here. An additional 9. So this is what's known as a 9-13-9, which tends to be a bearish setup. We've got downside targets here. This is the sequential count. The combo count does leave 2 more weeks of upside as a potential to get the 13 on the combo count. This is a weekly TLT chart. You may say, why are we looking at bonds? We're looking at bonds because obviously if bonds reverse, that tends to be bullish for stocks and commodities. On this weekly chart, we've got a 9 and a 13 active and another 9 and a 13 active. You can tell that by these lines here. That tends to be weekly exhaustion, which says the probability of a reversal is relatively high. The downside target here for TLT is $112.45, which is roughly 13% below this close of 129.17. Quickly, this is the daily count on TLT. We hypothesized last week that we could pick up a 13. This week on the daily count, we did get it. We also have the 13 right at this green bull-bear demarcation line, which would be a logical place for a reversal. If you're a bull in treasuries or a bear in stocks, we have not picked off the 13 in the combo count, and that would require TLT to exceed or close above $130.36. All things being equal, even if TLT pushes higher towards this target up here, it could run into problems relative to Demark exhaustion counts with a 13 waiting in the wings. This is a daily Demark chart for FXE, the euro currency ETF. We have the market coming down towards a propulsion support level and picking up a 9 and a 13 on a sequential count. It's possible on a combo count that we need a little bit more weakness. 2 more days could potentially pick up another 9 and a 13. The upside propulsion target as of Friday's close, and these propulsion targets are subject to change as markets move, is 126.44. If the euro were to move towards 126.44, that would tend to be bullish for stocks and commodities, bearish for treasuries, and bearish for the US dollar. Now we're looking at the weekly chart of the Euro FXE. We've been waiting potentially to pick up a 13 on the weekly chart. We did get it today. This weekly close is below this weekly close here. This is why this 13 came up. We have a new propulsion target on the weekly chart at 136.08, which again tends to be bullish for stocks and commodities, bearish for the dollar, and bearish for bonds. This is a daily chart of VEU, the Vanguard All World Index, sans the United States. Why is this important? This is basically the global stock market. If this chart and this ETF are healthy, then stocks in general tend to be healthy. We've been looking at this for weeks. We remain above this upward sloping pink trend line from the October lows, which is a positive development. Now we have a clearly established uptrend. This is a low, a higher low, hopefully a higher low, higher high, higher high. We also held this week at the 20-day, which is the blue line here, the 50-day, which is the red line, and the blue trend line. In theory, you would think this is pretty strong support, and we would be able to move in this direction here. We'll just have to see what happens. All things being equal, this chart tends to lean bullish. Another development, this is the 200-day moving average in pink here. Notice the slope of it starting to turn up. It could be a very good sign. It's a little too early to get excited about that, but typically that tends to be a good thing, just as the 200-day rolling over here was a bad thing and price declined. This is a weekly chart of VEU. Not much really changed here. This week we still have a 22-week moving average rolling over. All things being equal, that's bearish. Downward sloping trend line acted as resistance, bearish. The bullish piece of it is these histograms ticking up can foreshadow this bullish cross. However, down here on ADX, red is rising and still above green. That tends to be bearish, and this is trying to turn back up, which would also be bearish. So we have to keep an open mind about stocks still exhibiting some weakness until some of the things on this chart are cleaned up. This is just a little bit different look at a daily chart of VEU. You can clearly see here we remain above this trend line. We held the neckline that we've been watching. We hit the target for the head and shoulders pattern and came down as you would expect here. But now we appear to be above this trend line here and this trend line here, which looks pretty good. We're revisiting a VEU daily chart here that we used weeks ago to say that this high here at point C signaled a trend change from a bearish trend to a bullish trend. You can see the trend here. We're in this trend channel at the lower end of it. When we were at the lower end here, we made it to the upper portion of the trend channel, lower end to the upper. Hopefully, if you're a bull, we're at the lower end and we'll move towards the upper part of the upward sloping trend channel on the daily chart of VEU. This is European banks or financials. These were the lows that we were concerned about. The point here is we did make an important higher high here relative to this high, and it appears this week that we're making a higher low relative to this low. So as long as that holds, that keeps this uptrend intact, at least for now. This is a chart that we've not shown before. It's the New York Stock Exchange Composite Index. It's a weekly chart. We use it for support and resistance. There's a long-term downward sloping trend line or intermediate term trend line. We held here recently. That's a good sign. This is a long-term bullish trend line coming off the March of 2009 low. Held here, and we held near it here. This is relatively strong support here, and we appear to be holding. You'll notice here inside the orange box, when price consolidated for several weeks near these potential forms of support, once it broke out, this here is a 21-week advance. Here, a multiple week advance. This looks similar to this. So if you're a bull, you're hoping that we get something like this or something like this from here. This is very similar to the last chart we looked at. It's just familiar because we've used it in the past. It's a weekly chart of the equal weight S&P 500 ETF. Good things tend to happen when you're above these two blue lines. All things being equal, you'd prefer to be above this 50-week moving average. Good things happen above it. Bad things tend to happen below it. We came down and tested this line this week. For now, it's held. So we're above this line, and above the 50-week moving average. All three are good signs as long as they hold. If you read our blog short takes, you saw a smaller version of this chart earlier in the week when things weren't going well. We hypothesized that there were numerous forms of support in this area here from multiple trend lines, and that we might get a bounce. This is a nice looking candlestick here. All things being equal, this is a logical place to hold, and it appears for now that we've held there. 3 points that we want to make here. We've looked at this before. This is a daily chart of the S&P 500. We hypothesized that good things tend to happen in the green box here. We're in the green box. That's positive. And good things tend to happen when you're above this downward sloping trend line where we held in June. Both of those tend to lean bullish. The other good sign is Williams percent R on the daily chart, which is a measure of momentum, is making a series of higher lows. When you see Williams percent R leave white space on a chart, if you leave white space here, that tends to be bullish, as you can see here. And conversely, if you leave white space here, that tends to be bearish. This is a weekly chart of the VIX, or the Volatility Fear Index, that we've looked at in the past. The black line is the VIX. You can see when the VIX is below these moving averages here, the S&P 500 weekly tends to perform well. When the VIX is above and the moving averages are sloping upward, stocks perform poorly. Below, stocks do well. Above, stocks do poorly. Right now, and we can get whipsaws here, but as of the close on Friday, the VIX is below the moving average cluster here, which tends to lean bullish, and the moving average cluster looks like it's trying to roll over. It rolled over here, stocks did well. It rolled over here, stocks did well. The other potentially bullish development, here's a MACD cross here, which is a bearish cross for the VIX. Stocks did well. MACD cross, stocks did well. We are trying to get a MACD cross here. We can get whipsaws in here, so this doesn't mean too much yet, all of this, but it has to start somewhere, and as of the close, all of this looks fairly favorable for stocks and commodities. This is a weekly ratio chart that we've looked at in the past. This is the CRB index relative to the S&P 500. So this is commodities divided by stocks. When this ratio is falling, stocks are stronger than commodities. When the ratio is rising, commodities are a better place to be than stocks. A A few weeks ago, maybe 3 to 4 weeks ago, we hypothesized that commodities were trying to make a stand here. We do own commodities. We own copper, we own oil, and a diversified basket of commodities. We also noted a few weeks ago that you'd like to see RSI on this ratio chart clear 50 here and remain above 50. That's when commodities tend to do well. We're not there yet, but this is a good sign here. You can draw trend lines on RSI, and typically when you break a trend line on RSI, it's foreshadowing that this downward sloping trend here would also be broken, which would be bullish for commodities. You can see here when we clear RSI on this chart and hold above it, this is the CRB index weekly, commodities tend to do well. As of the close on Friday, July 13th, you've got 1, 2, 3 pretty good looking candlesticks. We're holding above this. For now, this tends to lean bullish for commodities relative to stocks, which is a good thing for risk since commodities have been performing very poorly relative to stocks since last year. We've reviewed this chart in the past. This is a daily chart of gold relative to a basket of commodities. You can see the trend is still down, so I would prefer to own copper or oil or a basket of commodities rather than gold now. To become more bullish on gold, which we're more than open to doing, you'd like to see this line over here look more like this. The comments made with the previous chart apply to this chart of silver relative to a basket of commodities. Like to see this chart look more like this to become more bullish on silver. Silver could go up, but this chart tells us that it may not be the best place to be. This is a daily chart of the S&P 500 with short-term moving averages that we have reviewed in the past. These are Fibonacci retracement levels. Yesterday on Thursday, you can't see it on this chart here, but intraday, we came right down to the 50% retracement level and held at 1325. We closed today 25 plus points higher at 1356. This downward sloping trend line, what once was resistance, may now act as support, held as support here, which tends to be a good sign. Right now, it appears that we've got an upward sloping trend channel, and price will try to move into this white space up here, but we have to keep an open mind. This is a daily chart of the Dow. On Friday, we closed above this moving average cluster, which is a good sign. We've got the upward sloping trend channel. We'll try to potentially fill this white space up towards 13,000 in the Dow. The other good sign was this is a neckline here of roughly a head and shoulders pattern. We held right at the neckline, what once was resistance here, and it acted as support here, acted as support again here. So we seem to have reversed at a logical level. The relative strength index, or RSI, in the daily chart also closed above 50. All things being equal, you'd prefer RSI to be above 50. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavaco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.